that we are not just there to hopefully put the right numbers in the right boxes, but we are also doing a lot of tax planning. Now, tax planning usually happens before December 31st, right? But that being said, it's still, even at tax time, there are different ways to file, different way to present information. So we are busy with that. So yesterday, actually, we had 7 new clients coming in. Today, we already had 2. I think at 9 o'clock. We still had clients sitting here, signing up. So I don't know what's going on, although CPAs are retiring or what's going on, but we do have just an influx of new clients who have never worked with us before. So, actually, I can't complain. That's a good thing. Also, just another housekeeping items. We got some feedback after last week's call that people congratulating us on the new business. Just wanted to put that out there that, of course, we're going to take the congratulations. We're going to take every compliment. But this is not a new business. It's going to be, Concierge CPA is going to be 9 years old in May. And so we are just starting the Facebook Lives. We had these calls on a different platform up until December 31st last year, but it was harder to sign up. Facebook, luckily, doesn't need any registration, any sign up, so we just transferred our calls to Facebook Lives. The community calls go the following way. You send us questions, and we think that some of the questions might apply to more people than just the exact person who asked them. So, of course, without mentioning any names, we answer these questions so other clients or our network, our tribe can learn from it. You can put your questions in the comments. You can also email it to me. I'm here in our boardroom with my brother Laz, who is manning the technology. And he's also a CPA, and we run the firm together. We also have 4 more team members for a total of 6, 1 virtual and 4 of us here. So it is a boutique firm. We work really closely with everybody. Kind of our clients feel like family, kind of our friends. We really don't have a big social life other than our work. So, like for example, in December we had a luncheon for a group of our clients. We made them homemade goulash. Our mom helped make the goulash, and we served them here in the boardroom. So we are invited to clients' weddings, birthday parties. We're really an integral part of the lives of the people we serve. We go to funerals. It's really some more of an advisory role, being there whenever they need us. They can ask, and they ask us a lot of questions during the year. It's not just a year time when they see us. More of, hey, I have these questions. I'm buying this house. What do I have to get ready? They're asking me for all this info. We get questions like, do I lease a car or buy? These are the details, all kinds of things that even if you don't have a business, then you still have, might run into these questions. Of course, when it's a business, then sharing with you best practices to all the way how you grow this business so then you can sell it or, you do whatever you want with it, and how you can maximize the profits and also have a life and, still love your life. All kinds of things go in it. We talk about marketing a lot, managing the employees, hiring, firing, return on investment on different marketing expenses like Facebook ads and all types of things, mostly for white-collar professionals, a lot of law firms, a lot of single shareholder or small partnerships law firms, but also other type of consultants. Now, we do have a good number of other just all kinds of business clients, and we really like to see all types, even if we concentrate on the white-collar professionals, because it just gives us a feedback of what idea we can take from each and then share it with other people. Do a lot of outsourced CFO work where, for example, tomorrow morning I will have a client of mine. He's in New Jersey. I've been talking to him every month for maybe the last 5 years. This is a time when he segregates time for himself to dedicate to his financials. He's in New Jersey. I'm here in Brecksville. We look at the same screen via GoToMeeting and just totally dissect his financials and look at efficiency. Can he afford to give a raise to somebody? Bonuses? Can he afford to hire some new people? Should he raise his prices? Should he do like collections faster? Like all kinds of facets where it's just an integral part for the owner to sit down. So kind of we call it a CFO coaching. That being said, I talked about appointments, new clients, and this is not a new business. So a couple of emails that came in the last few days that I thought it's worth to share. So again, if you have any questions, just put them in the comments and tell us what you're interested in. We are gonna ask the questions without mentioning your name. Okay. I still have to get used to these glasses. I just got glasses after having LASIK done about 12 years ago. And every year my eye doctor says, after 40, you're going to have reading glasses. And now December was the first year. I said, yeah, maybe you should give me a prescription. Let me see how it goes. So if you have not seen me with glasses, that's why. Just got them. So the first question, it says, Hi, Borbala. I overpaid my IRS installment by $209. The last payment was supposed to be $140. I didn't know because I was out of country, and I sent them $350. Will they realize that and send me a check, or do we have to claim it? Chose this question because it might apply to other people who have IRS installments, and then at the end they don't owe the full amount, but they still pay it, and what happens with the extra money. So my response to this is they will send you a letter about the overpayment now that the shutdown ended, and then they're at work again. They will at some point, the computer will spit out this overpayment letter, and I believe that they will ask you if you want a credit for a different year. If you would owe, and this client actually doesn't owe for any other years, but if he would, then they would just apply it for another year. But they will ask him, if he wants a credit or a refund. Most likely, they're gonna refund him his money. Got these beautiful flowers this morning from a couple who are dear friends and also clients of ours. So just thought that we'll have this in the picture. Hello, I've signed a letter for ongoing services and made appointments for February. I remember during our last appointment you mentioned a spreadsheet that someone else uses that I could possibly alter to fit my needs. If it's still available, can you send one to me? Nowhere in the IRS code or any other law does it say that you do have to have your accounting in QuickBooks. Of course, there are other accounting softwares. There's Xero, there's Peachtree, free ones like Wave. Most of us use QuickBooks Online these days, but definitely when business is getting bigger or when they're very small, QuickBooks Online might not be for them. This is one particular situation when I told the client, you're so small, you're just starting out your business. When you have just a couple of $1,000 sales a year, maybe you don't even need QuickBooks. QuickBooks right now, just a side note about QuickBooks Online, there are 3 different versions of it: Self-Employed, Essentials, and Plus. And if you go on the website, that you see, for example, we really want you to get Essentials or Plus. Like the Plus one is $60 a month, so plus sales tax. So more than $720 a year. Somebody who's just starting out and didn't make any sales, maybe they say, this is really steep for me. Now, that being said, if they go through us or any other CPA who has the wholesale license, they can pay half of that. So right now, that would be $30 per sales tax. So even though, 30-some dollars, I told this lady, you can really just use an Excel. Now, we do this business for long enough that we have all these templates that we put together and just give out to clients or, whoever needs them. So I told her, there's this Excel, which is basically just the P&L side, right? Just the income statement. P&L stands for profit and loss. Also, it's called income statement. So basically, it is just a list of income, revenue from clients, from sales, and then all kinds of expense categories that I thought for her business it makes sense, to call those expense categories that way. And then the spreadsheet has 13 columns, one for each month, and then a total. Every month, when the month ends, for example, tomorrow is February 1st. Let's say she gets her bank statement, saves it from online. Of course, best practice, have all your bank statements and credit card statements saved in like an online, a cloud-based storage place. Like we use Dropbox Business. We share these folders with our clients. So every month, if we don't have access to their accounts, they put their bank statements into this shared folder and all the credit cards. So what I told this lady, at the end of the month, get the previous month's statement. Let's say she only uses one bank account, and just start filling out this Excel sheet. How much total deposits did I have? Deposits from clients. That's another thing. I have to have these side notes all the time. If you put money into the business and that was like owner contribution, owner investment, obviously you don't have to count that. Just revenue from sales or services. So you put that down and you look at like, okay, the first one was Office Max. That's office expenses. I'm going to put it on the office expense line. The second charge was gas. So I'm going to put it under auto gas. And so on. So technically that's what QuickBooks does, or any accounting software does for you. But you could technically do it yourself. It's not as bulletproof. It's not as exact. It's more prone to mistakes. But you can live with it. Now, if this particular client would have told me, Borbala, yes, I did start my business last month and I don't have any sales yet. But by 6 months from now, I'm growing this business to $500,000, which this morning, actually, we did have a client who was just starting her business with a partner. And she said, we looked at her Square reports and she had like $200 sales. But she said, there are some big shipments, inventory shipments on the ship coming here. And it's going to take us about 6 months, but we're going to sell them. So it's going to be at least $150,000 sales in the next 6 months. My answer in that case was, just do yourself a favor and let's set up QuickBooks right now. You have to get ready. You want to have $1 million sales by the end of the year. There's no time to mess around with a spreadsheet. You have to get QuickBooks. You have to get ready to use it, and before you get really busy. But in this case, I did give this lady the spreadsheet, and actually we could have one of these weeks we could just show you that spreadsheet and just to understand what's going on and what would you do about it. Next one. Hi Borbala, quick question. There are no quick questions in accounting and tax. The young lady who helped me last year with research gave me her W-9 and it's in my Dropbox. She's asking for a W-2, which obviously is not the case because she was not an employee, but will we give her a 1099? How does this work? Thanks. Chose these questions because it's very prevalent. The 1099 deadline is today. Actually, all the employers, all the businesses who have to, I'm going to rephrase it, not employers, but businesses who have subcontractors should have given out the 1099s and sent it to their subcontractors by today. I believe to send to the IRS, like we have like 2 more weeks. What is that, today as well? Okay, Les says that's also today. And that being said, I literally 10 minutes ago just got 2 emails saying, I'm working on getting the W-9s. And I'm working on cleaning out my QuickBooks so I would know how much I paid everybody. It's like, we're going to be late in those cases. So, but we always say it's a process. So clients who just joined us recently, they are still not in the habit of doing things at the correct right time, so they don't incur penalties. So we are not in the business of scolding them or being harsh with them, but then somehow slowly and very lovingly, we're going to nudge them into the right direction. So that's another reason why they hired us. So in this case, this lady was right that the subcontractor cannot get a W-2. Obviously, the subcontractor was even more clueless. It's like no W-2, it's a 1099. But in a lot of cases, actually, I heard a lot of confusion about this W-9, 1099s, which one I give her. Somebody this morning told me that, my subcontractor's accountant already made him prepared him a 1099. I said, it's not from your business for sure. So W-9 is just a form. People ask me, can you give me a copy of a W-9? Like, no. You go and Google W-9 and it comes right up from the IRS's website. It's a fillable PDF. You fill out the first page, you print it, sign it, date it, scan it, and give it to me. W-9 is like, we're not giving out blank forms for that. It's basically just a vehicle for a subcontractor to tell the business owner, this is my name, my address, and my social or EIN. Business name or individual, whichever. There are a couple of boxes that they have to check out. Basically, am I an LLC? Am I a corporation? Am I a partnership? How am I taxed? And then do I use a social security number or an EIN number? Now, there's subcontractors who don't even know all these things, so they might need some help. I also, again, as a side note, I tell the companies, the businesses that we work with, there are 3 things, basic things, that you have to have on file when you have subcontractors. And you're going to thank me 3 years from now when you're audited to show all your 1099s and all your subcontract information versus W-2. It doesn't have to be the IRS. It might be, for example, the workers' comp. Workers' comp only collects premiums as an insurance on W-2 wages, on payroll. A lot of people who would say, I'm going to put everybody on 1099, especially if my workers' comp rates are high, like construction. Workers' comp comes out and said, let me see those records. Were you supposed to be an employer and issue W-2s or 1099? So even if the IRS doesn't audit you, you might get something like that. And this is what you have to show. You have to show the contract with the subcontractor. So again, if you want to do things right in 2019, do yourself a favor, just have a sample contract drawn up by your business lawyer, right? And just one time and for one certain type of contractor, and it's done. So they should sign one time, not every year, maybe even just, one time contractor. Have the W-9 in place. So tell them. And the perfect time, the best time to ask them for these is before you hand them the first check. That's when they're prone to say, whatever you want me to sign, I just want to get paid. So give them the contract, tell them to Google and print out the W-9, fill it out, so then you can have these 2 things back and on your file forever. And the third thing is, if you have a business and you have subcontractors, is you should really tell them to give you an invoice before each time you pay them, right? You can think of a client who works with about 20 subcontractors every month. Every one of them, even if the amount is the same, technically they should give you an invoice. Employees don't give out invoices. Subcontractors give you invoices. So that's another thing that you should have in your subcontractor file. And you have these. Just imagine 3 years from now, again, if God forbid you're audited, you just look in that Dropbox folder that says 2019 subcontractor info, and you have everything there. And of course, they're going to ask you for all the accounting information, going back 3 years. But how hard will it be 3 years from now to gather all this information for a contractor that might have worked for you one time or 1 quarter, 1 year, 3 years ago? It's literally impossible, to find people these days. Why would they even respond to you, right? Like if they're not working with you anymore, the chances are very, very slim. So again, these are just things that if you're just in the habit of doing the right thing at the time, then it's just going to make your life so much easier. Maybe I already told this example, but a client of ours, a bank account was hacked, not just the debit card, but actually the bank account. So he went to the bank and said, you have to give me a new account. The banker said, okay, fine. So, and before they closed the account, he reminded himself oh, Borbala told me to save all the bank statements. Like I was supposed to save all the bank statements on my Dropbox folder for every month, and I didn't do it. So he asked the banker, will my online login work for this old account when I go home? So that I can just go in and save all the PDFs going back 3 years? And the banker said, oh, yeah, of course. He went home. Of course, his login never worked again. Now, he did need his bank statements, not just for me, but he needed for something else. He went back to the bank. They said, yeah, you have to pay $36 a statement to get these from us. Again, something that was so simple. You look at your bank account, hopefully, especially if you're a business, like you're really supposed to know what's going on in your bank account. And the first of the month, just go in, save the PDF of the statement, not screenshot or anything, but just basically what we used to scan back, the paper statement that we got in the mail. Now you can just save the PDF statements, call them 2019-01, 2019-02, and have it there forever. You're going to thank yourself, if 3 years from now you're going to need it. Now, we were at, and this is just something that I wanted to mention. We mentioned why it's really good, and you can thank yourself later if you follow what your advisors tell you. And I have an example about this that really struck me last weekend, actually last Thursday and Friday. We see so many clients, and this is why I guess attorneys and doctors are still in business, because clients or then prospective clients do not listen to their advice. And I hear a lot of stories from attorneys of like $1 million damage because the client did not listen to the attorney, and then of course the worst happened. We deal with this all the time as well. Like all these best practices that we share is just basically for your own good. But again, I'm not one to judge anybody or scold anybody. I know it's a process, and this is actually what happened to me so 2 weeks ago, Saturday, we had a blizzard here in Cleveland, and I thought it would be a great idea to go skiing with my son and my husband. And we have a little slope here, very close to our house, but it was such a big blizzard, like we couldn't barely see anything. But there were hundreds of people on the slopes. So almost at the last time we come down, I have an accident. I'm almost carried off the slopes, but I managed to get off somehow. I was on an obstacle. I found myself on an obstacle course I had no business being on. And long story short, ended up in the urgent care the next day to have x-rays done. My left knee and ankle was badly damaged. I got crutches. I have a walking cane. And the doctor says at the urgent care, here's a prescription for a very potent pain pill. And I'm thinking, it doesn't hurt that much. So I actually never went to get the prescription at the pharmacy. Maybe I took an Advil first day. My leg is badly swollen. I'm thinking, it's fine. I can manage. I really don't take any prescription pill or otherwise. It's fine. So this was Saturday, and I'm carrying this all week. I'm starting to work 12 hours, 14 hours. And then by Thursday, and if you saw me last Thursday on the call and I didn't have that much energy, maybe now thinking back, that's why. And then by Friday evening, I feel that I'm really not myself. I'm agitated. I'm tired. What's going on? I'm just not myself. I'm just really everything bothers me. When I realized I did not follow the doctor's orders. And I just realized I have all this pain, chronic pain, for a week. And I've not taken anything. And of course, it drained my energy. I should have just totally listened to the doctor and say do what he said, and just take my, pills, and I would not have been in that situation, being just being snappy and just totally down. And I was thinking, that's exactly I did what I tell my clients not to do, and some of them, they still do, or then they don't do it, and then they end up being clients. So it was just a reminder for me that there is a reason, even if I don't know, and a lot of our clients, they don't know why the reason. I don't have 6 hours to tell them everything, all the different ways. This could be sideways. This could go wrong. But we know why we are saying things or why we are sharing these best practices. We see more things going wrong than we would like to. So again, I should have just totally followed my doctor's orders. I tell my clients, like, it's for your benefit if you follow what we tell you. But again, it's a process. You might realize it later. So long story short, next question is, this is some great friends. I got some info about the Canadian tax, 25% capital gains. I want to sell my house in Canada. Process is low, and the lawyer there will retain 25% of the sales price. My question is about the U.S. tax. How much do we have to pay? Let's say that the capital gain is $300,000. We pay tax in Canada 25%. What would be the U.S. tax? So this happens, this question comes up frequently when we work with international taxpayers. Everybody, so first of all, everybody who has a green card, a permanent resident in the US, or who is a citizen, even if they have not lived in the US for years, they have to file US tax return on their worldwide income. The next item that we get a lot, does that mean that I pay tax twice? Most likely not. That's the short answer. The longer answer here is that you sell a house, and this is not a residence, just a investment house. You sell it in Canada. You pay tax there, let's say 25%. You get some paperwork for it. Then that year you file the U.S. taxes. Of course, you tell us about it. And then we calculate what's called a foreign tax credit. So I cannot say here, it's a more complicated calculation, but it's not dollar for dollar. But basically, if let's say the highest tax rate for capital gain, it's 20% in the US. Canada is 25%. US gives you credit for what you paid to Canada. So technically, you would not owe anything because the Canadian tax was higher. Now, that's why I don't want to say that's exactly how it works, because it's not a dollar for dollar credit, but a percentage of the foreign income. But in short, that's how it is. So, for example, we have clients in Europe where, they are US citizens, they move to Europe, they collect Social Security, or they can have another like W-2 type of income in Europe, and they say, I don't have to file anything. Yes, you do have to file. And I already paid tax in Europe. Usually European tax rates are much higher than the US, so most of our clients do not pay anything. Now, if this is ordinary income, like W-2 type, there's also a foreign income exclusion, which is like, what is it? It's like 100. It used to be 117, 120,000. So you would even not have to pay anything. But again, do yourself a favor and file in the US. Now, another thing here is if you do have bank accounts outside of the US and you have at any point of year, you have more than 10,000 US value in that account, you have to file what's called as FABR, like a foreign account something. It's not with the IRS. It's actually the Treasury Department. It's filed online now. It used to be on paper. Now it's online. And unfortunately, the penalties for not filing that form is 50% of the account balance. So think about it. And we try to ask clients when they come to us first time and we don't know their situation, it might be a situation where they do have foreign accounts. Sometimes it doesn't even come up because they lived overseas or their parents, live overseas. They are from, I can think of a client who lived in France, another one in the UK, where we didn't even know that they worked when they were younger. They worked there before moving to the US, and they have now pension from that country. And the pension goes into this foreign bank account and it just sits there. If it's more than $10,000, not average, at any point of the year, you do have to report it. Now, the reporting, while it feels like they want to know everything, bank account number, bank address, It's like it feels like you're naked, but actually it doesn't come with any tax. It's just the reporting. Now, if you earned bank interest in that account, you were supposed to put it on the tax return. But this FABR that I mentioned, it's due in May every year. It's just basically just the reporting. So since we had all those offshore account issues, I know 10, 20 years ago, then these things started really being something like very important, and they go after. And then here's another thing about this. I remember I used to have clients from Mexico, and they said, we can have bank accounts in Mexico. Mexico will never give this information out to the US. They will never share. I used to hear that from Eastern European countries or China. Like, they would never. China, I really don't think that at this point. I would think that's a country that doesn't share. But all the European countries now, I think even Mexico, and majority of the world does share with the US all the account information of the people that they know they're tied to the US otherwise. So again, just don't think that they're not going to find you if you don't do it. Just do it. It doesn't cost a lot, even if you have a professional help you with it. It's online. You just need to know the bank account number. And again, if you earn interest in that account and you put it on the US tax return, you're fine. The tax rates on interest and dividends are so low in the US that there's just no reason. Another client, good morning. I have someone asking about payroll. I wasn't sure if you did it, but I was sure you would know someone. So the answer to this is yes, we do payroll. Now, we are not like a traditional payroll provider. Usually we don't just, do payroll on and off. It's what we call concierge payroll. So most of the clients who do payroll with us, they have their bookkeeping, tax preparation, tax advising, maybe even CFO services with us. But it is an option. We do encourage people to use what's called IOP, Intuit Online Payroll for accountants. If somebody would not use that, then I would suggest go for the payroll module in your QuickBooks Online. Basically, IOP is that version, the online payroll in your QuickBooks module. Is just basically your CPA being on the back end and making sure that everything is filed on time and everybody's taken care of, and you are not late for everything, and doing the back end stuff for you. But otherwise, I would suggest people to use QuickBooks, the payroll in QuickBooks Online. Now, and we had a new client like this before. Like he's starting a chiropractic practice in a few months, and just ready to hire the first employee. And I asked, so when do you think you're going to hire and have to pay the first employee? And he said March 1st. I said, okay, you should not come to us February 28th, right, and say, oh my goodness, can you set up payroll? I need to pay somebody, in 5 days. I mean, technically it can be done, and we've done it, but here's the thing. When you're a business and it's the first time you want to pay somebody on a W-2, you have to register with a bunch of agencies, and that takes time. So set up on our end could be one day. Obviously, linking your bank account to pay all the payroll taxes online, it takes a couple of days also, because they put a little test deposit in your account and you have to respond. But going to the Ohio Unemployment or your state's unemployment agency, register you with the state as an employer who is going to do withholding, register you in Ohio, what's called Ohio Business Gateway, register you for workers' comp. This takes usually 2 weeks. So I would tell anybody, if you're thinking about hiring, just talk to your CPAs like at least a month before, so you can plan these things. There could be things like the shutdown where, we couldn't even call the IRS. And I have about 10 IRS notices on my desk that I need to call the IRS for, and every time I call the CPA practitioner line, it says, you have to wait 3 hours. So again, just be mindful. If you think you need to hire somebody, just act way before. Hi Barbara, we hope you're well and Happy New Year. We have a few questions concerning investing. Do you advise regarding investing issues? If so, would we be able to ask you a few questions? I think we had a question like this before. We do not do investing advice or financial services. That's something we made a conscious decision not to. My friend Ron keeps reminding me that we leave a lot of money on the table, and for now we can live with it. We're such a growth phase that we just didn't want to have like another thing that distracts us. But a lot of CPAs have somebody in their office selling insurance, selling life insurance, disability insurance, and also do investing, and they're licensed. We work with a lot of professionals, financial professionals. One is actually, his name is Ken Robinson. We went to his open house last week, and he's a holistic fiduciary, just gives basically fee-based advice. He does not sell anything. You go in and he looks at your situation and just tell you like what you should do based on what your plans are. So that's one type. And there's the other type, like my friend Ron, where they have a firm and they have all these investments opportunities, contracts with all these investment firms. And then again, they can help you, and they help you actually open the accounts and buy all these investments. This morning I had clients who for the first time wanted to invest, contribute to traditional IRAs for 2018. So just as a side note here, if you have not filed your taxes for 18, which I don't think anybody did so far, there's still time to contribute to a Roth or traditional IRAs. And maybe we can just stop for 1 second to make a point of what these are and which one has any tax savings, tax benefits currently. Traditional IRA, both Roth IRA, the upper limit is $5,500 per taxpayer that you can contribute a year. I think if you are over 50, there's some extra, like 500 extra or 1,000 extra. You can Google this. Information is available. You can contribute anything below that. This morning somebody asked me like, so that's the only amount we can contribute? It's like, no, you can contribute anything below, but that's the maximum. Now, if your income is really high and you already have 401k at your work, then check out the rules. And this might not apply to you, that you're not allowed to contribute. But just in theory, they are traditional and Roth IRAs. The Roth is no tax savings right now. On your tax return, doesn't even come up. You don't get any deductions. Basically, you put after-tax money in it. But here's the thing. If you're really young, let's say you are 20 years old and you did earn at least this much. So if somebody wants to contribute $5,500, they have to have a W-2 at least that much. You put money in there. How much is your tax rate anyways? How much would you save if this would be before tax? Your tax rate for, let's say you earn $10,000, technically zero, right? So if you can forego the tax savings right now, if you don't mind not getting tax savings, just go for the Roth. And this is why. You're 20 years old. You can take this money out when you're 59 and a half. So basically 60 years old. That's in 40 years. Anything that grows, this $5,500 grows into, I don't even know, like what would be the average of $5,500 in like a S&P 500 index rate in 40 years. But it should be a good chunk of money. When you take it out when you retire, you're going to take it out and not pay any tax on it. No tax whatsoever. Now, hoping the tax law don't change, but they should really keep their word. So no tax savings now, but the growth, everything is tax-free. So when you take it out, maybe it turns into $100,000. You take it out when you retire, no tax. On the other hand, the traditional IRA, you do get a tax deduction for it. So you have to let your CPA know. You have to let us know if you contributed. Now, this is what I told these clients this morning. You can contribute now. Please make sure, triple check that the banker did put on the paper that this contribution is for 2018, if that's what you want. So, because they just 2019, if you don't say, they might just not put it for 2018. Up until April 15th, or if you have an extension. Does it go later, Laz? only step. So, okay, so up until April 15, you have the option of putting this money in, contributing to last year's plan, and claiming it on the tax return. But you should not file before you contribute. So this morning, this couple said, we want to contribute 2 times 5,500, that's 11,000. I said, I'm going to prepare your tax returns and I will sit on it until you email me a confirmation that this money actually went out and it's contributed now. And then we were going to file your tax return. Obviously, the numbers are going to be already on it. So coming back to the question, most of the financial advisors who work with Schwab or Fidelity, Vanguard, they help you buy those mutual funds and those stocks. Obviously, there are money managers who just for a percentage, they manage your money and they can have all kinds of investments. I don't want to get into it, but actually it's really, fascinating when I hear anybody talking about it as far as how they change, the investments based on risk as you get older, and what should it be. It's a big science that is just fascinating to me. But life is very short, and I don't think that at this point I have time to get more into understanding it. But the most important thing is you should contribute. You should think about retirement. Yesterday I was on the phone with some young ladies from Case Western University, where we are going to do a day-long seminar in February, actually on my birthday, on the 20th. And we have to talk to the master's degree students and then international students, and then just an open session where all 400 Cleveland Institute of Music students are invited. And one of the things, so these 2 ladies work for Case, and they said, can you please just talk to them, yes, about tax, but also about personal budgeting and retirement. So kind of like a financial literacy program. And I said, yeah, these are students, master students. I don't know how much income they have. They start having little W-2s from when they substitute at the Akron Symphony, or if they are really good at the Cleveland Philharmonic. But the lady said, yeah, we still want to form the good habits early, right? So we want to tell people, and this is what I tell anybody, if you work for an employer that has a 401k, that has any type of retirement plan and has a matching, let's say 3% match, please contribute as much so you get the match from like free money from the company. So then you then have 2 times as much, sent into. Now, yes, I mean, you have to have a good plan of what you invested in, but I really think I thought that was a great thought of reminding the musicians, the future musicians, to start these habits early and start thinking about retirement. And also another thing that they said we should remind them is about their personal budget, that to have savings for like 3 months. Just know their numbers. And this is, again, what we teach for businesses, but the same thing at home. You know how much minimum you need every month to keep the lights on in your apartment, right? Some people call it the nut in your business. What is the minimum nut that I really need to bring in every month to pay for payroll, pay for rent, pay for all the subscriptions and the utilities that I really need to? So know that number and have that saved at least for 3 months, right? So it was a good reminder. Next question. This is an Amazon, like an online retailer business from Indiana. And he says that Amazon claims we will receive our 1099 from them by January 31st. Do you think we should wait to make our sales tax payment until we confirm the sales from the 1099 or not? Chose this question because, again, with the 1099s, there are a lot of 1099s that you might get late. Now, I always tell people, you should have your own accounting. And in your accounting, you should have all the income that you got last year. It doesn't matter if you get a 1099 or not. The 1099 should not be your accounting. Even if you are a freelancer, a subcontractor, you should know how much you got. You should have a bank account, first of all, for the business where you put in all these freelancers' income and the checks that you get from as not W-2 type of income. So you should know this number, right? You can add together all the deposits in your bank account, business bank account, and know this number. You should not rely on and take all these 1099s you get to your tax person and say, how much was your income? Oh, here are the 1099s. Yes, you should take your 1099s and you should add them together, but then you should compare to what your records are. A lot of people, especially when they started out, I didn't get a 1099, I don't have to pay tax. No, that's not true. If you don't get one, it's their responsibility, the other party's responsibility to send you one. You are not responsible. If they fell off the face of the earth, it's their issue. They have to sign their tax return. There are 2 questions. Did you have to give anybody a 1099, yes or no? If yes, did you do it? Now imagine what happens if you say, yes, I had to, because I'm claiming contractors and labor cost more than $600, but then they say, no, I didn't do it. You cannot say you did it if you didn't, because everything is in a computer. They will know. But that's on them. You just imagine, like, I have friends who freelance, let's say, and this is what the case people said. Some of the musicians, they do these gigs for $100, $200, and they get paid by cash. You can get paid by cash or check, $200 here and there. It's not over $600 from that one person. Maybe they are not even a business. They don't have to give you a 1099s. It's your responsibility to say, I kept a record. I kept track of how much income I had. And the other thing that they forget is when you get 1099 income, basically you have a Schedule C, a business tax return attached to your personal. So there are all these expenses, valid, legitimate expenses that you can claim. It's not like you're just paying tax on the 100% of the gross amount that you got paid. You have all kinds of expenses, right? You're using your cell phone, so part of it is business. You're using your home internet. Depending on how much in business activities you do, you have mileage to go to all these gigs. For the musicians, they need to buy the paper, the music, maybe some iTunes downloads, CDs, repairs, supplies to the musical instrument. There are all these things that you just have to brainstorm. This is what actually we do. This is why we spend so much time on tax prep, because especially with the new clients, we have to brainstorm all these different expense categories that then they're going to end up on the tax return. And a lot of times it's like, oh, I never even thought about that. Oh, home office. Oh, yeah, I bought a desk for my home office. Oh, yeah, I bought a chair. How much was your chair? $500. Like, you see, how much was your desk? So it's a lot of brainstorming and asking the right questions to prone. So it's kind of like Q&A of, I'm asking, trying to get information out, and it's like, oh, yeah. And then we can have that list for next year. Okay, we have a few more minutes. So this client says, now that I have my business, I want to get started on my nonprofit. What information do I need to give you to start on the nonprofit? So I said, I'd like to help, and nonprofits are a lot of fun. We recently just incorporated a couple of them. There are a good number. So if nonprofits are really hot these days, you really have to do them well. There are very strict rules of how to do them, but they could be a lot of fun. Just think about it. If that's something that you want to do, have a cause, think about it, get others on board, have like a board of members. But otherwise, it's basically a corporation that you have to file with your Secretary of State. And you have to get EIN number for it. You have to get a bank account opened. You have to have bylaws by the time you go to the bank. You have to show all these things. And you have the mission statement. Then, of course, you have the board members. Then, very soon, you have to file with the IRS for your status. We do a good number of these every year. There is a filing fee, so you have to have some money coming in and already in the bank account before you can do that. So there's a filing fee with the IRS, at least $400, but depending on how much revenue or like membership fees or donations you're thinking you're gonna get, first year it might be higher. And the IRS will come back in a couple of months and hopefully everything's going to go through the first time. If not, you have to correct some stuff and give some clarification, mostly about your mission statement. So that's why I really like those applications filled out by attorneys specialized on nonprofits, because then really tight. And then it helps if you have a website already, especially one that asks for donations. And you also have to register with the Secretary of State of like a charitable department. Most states have this. So in Ohio, right after all this is done, we have to register and then annually file something with them. And of course, with the IRS, annually you have a tax return. And there are very strict rules how to keep the counting. So I would really not suggest anybody do a nonprofit management, including bookkeeping and tax returns and everything, without professional help. Okay. We talked about the Roth and the traditional IRAs. I had a quick question about maximizing the 401k deduction. This client asked how much, like he is over 50, how much is the new maximum that he can contribute. Now, every year with inflation, the amount goes up. Last year it was 17 and a half, now it's 18, now it's 19,000. 19,000 is how much you can contribute through payroll, and usually payroll providers want you to just sign up and dedicate to a certain amount or percentage throughout the year, that every paycheck has this deduction, but technically you can start at any time, I think. But over 50, you have an additional 6,000, so technically $25,000 that you can put away for retirement, and you're not going to pay tax on this. So if your W-2 is 100,000, you put 25 in the 401k through your employers, you're going to pay tax on the 75. Now, a couple of years ago, Roth 401ks started appearing. And last year, I've seen that it's a trend. They start to become more and more popular. And companies offer them, maybe bigger ones so far. But the Roth IRA is just how the Roth 401k is very similarly to what a Roth IRA is. It means you are paying the tax on it right now. So if your W-2 is 100,000, you are going to pay tax on 100,000, but you're not going to take 25,000 home. You're going to contribute to this 401k, Roth 401k. And what happens with the money? It grows, and when you take it out when you retire, anything that you take out, no tax. So again, if you're very young and your tax rate is not that high anyway, or you can forego the tax savings, then Roth 401ks are a great option. The last question. So it's tax season, as I mentioned. We're starting to work insane hours, and it's just January so far. Especially when our clients get into a new situation that they have not been before, it's confusing on what paperwork they need. I mentioned last week we did send out a reminder of what type of tax forms they should look out for, and put that in an envelope that we send them, or bring it in, or upload to their Dropbox, or upload to our secure server. This question is from a couple who sold their residence, and this is the first house they ever sold last year. So they're asking what type of paperwork they will need to bring me regarding the sale of the house. Now, this morning I had a couple who sold a house that was, actually they flipped the house, so that's totally different. When you do sell a personal residence, and you look, just using round numbers, let's say you sold it for 500,000, you bought it for 300, right? So while you lived in it, the value increased. You might have done different improvements to it, but it increased. The question is, will you have to pay tax on it? Will you have to show anything on your tax return? Now, the good news is when you sell your personal residence, especially if you lived in it 3 years, so the last 3 years out of the last 5, even if it increased in price, you don't have to pay any tax on it. especially during the recession, it was really like 10 years ago-ish. I've seen a lot, like a trend of a lot of people, like families doing this, buying a house that needs remodel, living in it, remodeling it while living in it, and then selling it. And they did this every 3 years. And that was like is a trend I've seen. And maybe a lot of people are still doing it. That being said, again, because there was no tax, right? The tax only comes in if the value, the increase, is more than $250,000 per taxpayer. So literally, you had to buy a house for $100,000 and sell it for $600,000. So 5 was, the gain, and you still didn't pay any tax on the gain. Only if you sold it for more than $600,000, which, especially here where we live, rarely happens. So that being said, why would they need to bring me anything for the taxes if there's no tax? They sold their house. They did not make more than $500,000 profit on it. Why do they still need to bring me anything? And this is why. The title agency, when you sign away your house, prepares what's called a 1099-S, which is a tax form that it doesn't even look like a tax form. It just has a little 1099-S on one of the corners, and it's tucked in with all the other closing statement or HUD statement, some people call. If you remember, it's like a legal-sized paper and has all the information of when it was sold, when the title transferred, and then has 2 big columns, one for the seller, one for the buyer, of how any proceeds are calculated. Let's say you sell your house for $500,000, they pay off the mortgage, and they pay some, all kinds of closing fees, final property taxes, and then it calculates how much actual cash you're gonna get from the sale. So they give you like a stack of papers at this time. This closing document, the HUD statement, is maybe the first one in the folder, but there are others that nobody looks at. Now here's a problem if you don't see that 1099-S paper and you don't put something on your tax return. And I'm going to tell you what that is. IRS gets this information from the title agency that this couple with this social sold this house. The IRS doesn't know if this was a personal residence or it was a flipping house. You flipped it or you inherited it, or what was it? Was it rental? Was it business? Like, they don't know. So they assume, if they don't know, that this is a taxable event. And they don't even, like, if this is a business property, you sold it for $500, you bought it for $100, it's $400 gain. Now you put a lot of money into it, you deduct that too. You would pay tax on the gain, only just a little bit. If you don't tell that to the IRS doesn't know, so just assumes that everything is a gain. This was a residence, so we still put it on the tax return under capital and say, there's an exception. I know I sold the house. I know I received, technically, let's say $500,000, but this was a personal residence. Please don't tax it. And the IRS doesn't. So what I told this couple is, give me a copy of the closing document. Give me a copy of the 1099-S, but at least the closing document, even if we don't have anything else, and we're just going to put it on the tax return. Just a line to telling the IRS this was personal residence, this was the address. So then you are basically shielding you from getting an IRS notice and having to respond later, and go back and forth. So again, just something you have to know. So we're going to start here next time. Let me know in the comments if you have any questions. You can email me at borbala@conciergecpas.com. You can find an email address on our website. I believe you can email us through Facebook, but also my email address is on the post as well. If you have any questions, or if you want just to double check something that you heard. There's so many, especially with the new law, so many different things going around. Like, I had a client yesterday and said, I thought meals are not deductible anymore. I said, no, entertainment is not deductible. And she said, I had it totally reversed. I thought entertainment is deductible and meals are not. I said, okay, that's nice. And she was highly educated, women. So if you have anything like that you have a question on, just to double check, a second set of eyes on any type of paperwork, let us know. Otherwise, see you next Thursday. And next Thursday, right? No, yes, news. In February, we changed these calls to Fridays because we are just so busy during the week that we changed the calls to Fridays, 6 o'clock. So actually all February, and even we think March, we're going to be here live every Friday at 6 o'clock. If not, we're going to post something about it. So keep safe out there, keep warm, and see you next week. Bye-bye.